Movements now with Nick Kunze from Sanlam Private Wealth. Nick, thank you so much for joining us. Now, after last week in the red, the market closed in the green this afternoon. What were the contributing factors?
Yeah, much better. Good afternoon. Much better to be on the show compared to last week, which was a disastrous week. Led higher by just generally a bounce back. Weaker dollar definitely had a play. And we saw the commodities bounce back nicely. And ahead of what's going to be quite an important week with Jackson Hole and Mr. Jay Powell speaking on Friday. A little bit of a risk-on feel, but yeah, the market felt a little bit oversold in the last couple of weeks. So I guess due a little bit of a bounce, but we'll take it to start this week.
Let's look at some results. Tungela Resources reports what it calls a resilient performance for the 6 months ended 30th June. But a drop in coal prices and an ineffective rail network hurts the mining company.
Yeah, all of the above. I mean, difficult to really get a positive feel about those earnings. Although the stock was up, I guess they rather looked at the outlook a little bit better. But they've been playing such a bit of catch up. Thermal coal prices before the Ukraine-Russian war was north of sort of $300 a metric ton. Now sitting at around about 150, so it's halved. And then, of course, as you said on your intro, adding also the rail networks, the problems they got with transit. We all know the issues there. Resilient, I guess, is probably not a bad summary, but they got a lot of work to do still.
Let's look at some international news now. China's central bank has cut its interest rate for the second time in 3 months to 3.45% to stimulate the economy. But this is not good news for the world's second biggest economy.
Yeah, it's a difficult one for investors as well, because I mean China is the world's second biggest economy, and up to a few weeks ago they were looking okay, but now they've actually tipped into sort of a deflation. We're all struggling with inflation in this part of the world, and they're unfortunately going the other way. China's powered world growth for the better part of a decade, and the numbers that are coming out are certainly worrying. And it's looking like it's slowing. Everyone's been looking for this, this big Chinese stimulus that's coming. As you said, this morning they came out with, but it was really nothing to write home about. 10 basis point cut on the 1 year, what they call the LPR rate. The market was looking for at least 25, and a cut on the 5 year, which they didn't do. The 5 year is the key one. That's what they run their housing sort of prices off, and they didn't do that either. So, a little bit a fizzle really, and Chinese market's down 1%. I think that sums it up.
Lastly, Nick, the BRICS summit starts tomorrow in Sandton. What are your expectations, and how do you think the market will react?
I mean, it's quite a nice buzz around Santon. I mean, our offices are just across from the convention centre, so nice to see all the dignitaries around and a little bit of a buzz about it. We could do with a little bit of good news, so we'll take that positive side. What's the results going to be like? I'm not quite sure. We've all seen the agenda. You mentioned on your intro about a development bank. That's going to be key, I think. Also, I notice on the discussion points, the idea of some sort of a universal trading currency, I guess, to settle things. That would be very, very interesting, although I think that's, decades away. And of course, the big talking point that we do not want to mention is the war in Ukraine, really affecting African countries with the wheat prices, etc. So lots to digest, but I think some more positives. I think there's definitely a push from this bloc to work closer together. Outside of the G7 and contribute to each other. So I think it's really exciting. I think it's good stuff happening.
Thank you so much for your time tonight, Nick. That was Nick Kunze from Sanlam Private Wealth. That's all from me for now. Up next, South Africa.